Top of the morning, laddies. We are 9H's Group 7, and boy, are you gonna learn something today. Let's answer the frequently asked question: where can we save and borrow money?
First and foremost, what is money? Money is any object or record widely accepted as payment for goods and services. There are two types of money: fiat and commodity money. Fiat money is the paper money we often use in ordinary transactions. They're practically worthless, but the government deems them more valuable than they really are. However, just remember that these guys won't be able to save you in the middle of the desert. Commodity money has some intrinsic value, meaning when an object used as money has a change in value, the value of the money increases or decreases as well. The characteristics of money include divisibility, it should be able to be broken down; durability, it should not deteriorate easily; portability, it should be easily transferable from one person to another; and lastly, limitedness. If you have too much money circulating in your economy, its value would degrade and would eventually become worthless. Let's talk money store of value. Rooting from the word storage, money should be able to be kept and used at a later date, and should be independent of inflation and durable when it is stored.
But who handles all these, you ask? In the Philippines, it would be the Bangko Sentral ng Filipinas. They are responsible for managing interest rates, the percentage of the amount of money borrowed by people to cover inflation. They are adjusted to stabilize or change the output of the economy. When the central bank raises interest rates, it prevents hoarding due to the decreasing money supply. This in turn decreases the quantity of money demanded from banks. This is done when there is a need to slow or contract the output of the economy, or to reduce inflation. When the central bank lowers interest rates, it becomes cheaper to borrow money, since there will be less to pay back. This encourages consumption, since you can borrow more money and use it to buy more goods and services. This is done to boost the economy's output and activity. These decisions are made by the central bank influence all kinds of banks around the country.
These types of banks branch out into two: monetary institution and non-bank financial institution. Let's begin with monetary institution. A first example in this category are commercial banks. These are main banks operating in the country with names like BDO, BPI, and China Bank, just to name a few. They give loans to start or expanding businesses and accept savings, time, and demand deposits from both households and firms. Next, we have thrift banks. These are smaller banks that also accept deposits but provide more limited loans and have a smaller capital as compared to commercial banks. Savings and mortgage banks are also examples of monetary institutions. The interest these banks earn are mainly used to improve themselves or lend to others. They usually have lower interest rates and compared to other monetary institutions like commercial banks. A rural bank, as its name suggests, are found in rural areas of the country. These banks are mainly used by farmers to gain access to credit or loans. These are most useful for them as when calamities hit the country and their crops are destroyed, they would be able to have a source of income from their deposits and in these banks.
Let's move on to non-bank financial institutions that essentially act like banks but are not necessarily ones. The Social Security System, or SSS, help employees gain income security even after retirement. But when availing of their services while employed, part of your salaries are deducted as contribution. The Government Service Insurance System, or GSIS, is basically an SSS for government employees, with the provision of financial security after retirement, but this time for government employees. Lastly, Pag-ibig provides cheap loans for housings